What the hell is a SPAC? Special Purpose Acquisition Company. It's the latest rage. Everybody is going gaga for this. Is it worth it or is it just a fad? Special Purpose Acquisition Corporations, also known as blank check companies. So this is when some very smart, sophisticated people, supposedly or presumably with a great track record, will go hat in hand to investors and say, hey, give us a ton of money right now. And we're going to hold on to that money and we're going to look for an operating company to either merge with or buy that's already publicly traded. And we're going to invest the money in that. And then that's how we're going to go public. That's how we're going to go public. We're going to like back it in like a reverse merger. These are like all terms that were really big in the 80s and the early 90s. When these companies, these SPACs, raise money to make their acquisition, special purpose acquisition company, they want to hold on to it. They usually charge fees on that. And then it's just they're at the ready to either merge into a public company, buy a public company, not just an operating company, but they want a venue or a backdoor approach to get into the stock market, to be a trading company, a public traded company. There are a couple of good articles. If you look up SPAC and you Google it, there's a ton of stuff on it. These are blank check companies and they're best efforts companies. Typically speaking, the management of a SPAC, they typically have about 18 to 24 months to make a move. If not, they return the money back to their investors. So they're really incentivized to make a deal, because if they don't make a deal, then they don't really get the big payoff on all the fees and stuff. So hopefully they're making a deal because it's a good one, not because they are running out of time and they feel under pressure. To me, it's kind of like private equity, like an exit strategy for private equity investors in a way. And I think they're pretty speculative. Companies do SPACs. Instead of going the traditional IPO route, they're looking to buy into a business or buy an entire business or take control of an operating business. They're just looking for something really good. And you have to have a lot of confidence that the managers of SPACs are going to be really good investors. They're a little complicated, but it's supposed to be a way of letting smart money buy a company, go public. And when they go public, it's kind of like an IPO. The stock goes up and everybody's happy and everybody makes out great. That's the fairy tale part of it, but they do work sometimes. But once they start working, it attracts more and more. So lately there've been a ton of SPACs. Here's DraftKings. The low on DraftKings is 9 and change, and now it's over 60. So that is 600% gain. And you look at that and you go, wow, SPACs are awesome. But then you look at Virgin Galactic Holdings, symbol is SPCE for space, and that's gone from 6 and change to 42 back to 20. So that's really tanked. And that move happened pretty recently when it straight up. It went on a rocket ship right higher, no pun intended, and crashed and burned lower. And then you look at Nikola, which went from 10, year low of 10, 52-week range, 10 to 93, almost 94, down to $24. This is what I mean by this is speculative stuff. And I don't know if people really understand what they're buying. And this is why it makes me think that there's a lot of areas of the stock market that are very bubbly, and bubbles pop.